So investors are and will be paying even more close attention to the Fed Chair Jay Powell's remarks and the central bank's gathering in Jackson Hole on Friday. Traders have dialed back their rate cut expectations after a hotter than expected inflation read. Well, let's talk more about this with Greg Fleming, President and Chief Executive of Rockefeller Capital Management. Greg, as always, thank you so much for coming on. There's so much focus on Jay Powell. I mean, it's unclear whether it's going to be a full policy speech or whether it's a little bit more like sometimes you get in Jackson Hole, a little bit more of a thinking piece, and whether you focus more on what he says or the reaction from the Trump administration.
Well, I think he might use this for a little bit of foreshadowing, and I'll explain that in a second. So what the Fed's dealing with, Francine, and you're seeing it in the data day to day, is the continuing tug of war between the employment and growth side and the inflation side. And you and I have talked about this on this program. Their greatest desire is to avoid having both problems. They don't want that word stagflation. And it's playing out, markets and everybody watching this in the data day to day. So I think a week or two ago, you had a good CPI number, stock market, equities rally, and literally a day or two later, you have a hotter than expected PPI number, and the markets go the other way. So nobody really knows which side is going to be the bigger problem. So they've tried to straddle that, and that's why they've kept rates where they are all year long, despite lots of pressures on them from all directions. I think, if anything, they're starting to tilt toward a first cut because the employment numbers in the last 3 or 4 months are definitely in a different spot than they were. And unemployment is starting to tick up, but workforce participation is, in particular, down more. So he may use this as an opportunity to say, to try to foreshadow that a little bit. Yep. I still think before I would say that they will definitely cut in the September meeting, they will watch the data again for the reasons that I'm talking about here. It's so at the margin close on both sides. Mm-hmm. They'll see what happens between the end of August and the end of the meeting later in September before they actually make a decision. But I think they're starting to tilt toward a cut at the September meeting.
But, Greg, I mean, I guess central banks don't have anything if they're not credible, right? It's all about trust. Yeah. So is, Jay Powell going to be a little bit more reluctant than, let's say, go for a 50 basis point cut just so that he is seen as independent?
I think also the data will keep him away from a 50 basis point cut. I know there are parts of the market that are saying maybe he'll cut 50. I think the market's ahead of itself there. I think this is still, he's got pressure on both sides. I mean, it's not like inflation is, absolutely in a bottle and there aren't things that are pressuring the inflation side. Plus, Francine, on the market side, he's got a very healthy equity market. He's got a risk appetite on in the U.S. So he's got to look at all of that as well. You have AI, which is a force right now, but it's certainly fueling tremendous investment. So I think it's not just the political side, and I think he's tried to, block that out this year somewhat. I think it's more the data would suggest if he wants to put his foot in the water on the employment side, he's going to do it in a more cautious manner than 50 basis points. 50 basis points would be a statement that he really thinks the economy is slowing, in a way that he's really concerned about. I don't expect him to go there. I
mean, my favorite, most geeky question, is there a data point that you look at to try and understand exactly what we're seeing? Because as you're saying, we're kind of in the balance right now. I know we also have retail companies. We have Walmart, Target a little bit later on this week. I mean, are they almost a better indicator of where inflation goes than some of the data that's a bit more backward-looking from the Fed?
Well, they're an indicator, but again, that's a process. Right. And one of the things I've said, and you and I talked about this last time as well, this is the first time in any of our careers, anybody, that we've had tariffs at this level in the United States. So exactly how that plays out and how much the consumer ends up eating versus different parts of the value chain along the way, including the U.S. corporations who don't raise prices or raise them less than otherwise. That's all still playing out. And you have a lot of economists saying, well, wait a minute, why hasn't it triggered greater inflation quickly? And that might be because the value chain's eating it along the way. So with that in motion, I think he's hesitant to look at retail sales, anything in particular. Francine, if there was something that I think they look at very closely, it's employment. And I think the employment picture in the U.S. is unequivocally softer than it was 6 or 12 months ago. And that's why I think if he tilts and starts to move toward the cut side, that is the single piece of market information that they're taking in.
And Greg, I think you're right. I mean, looking at the data, we're uncertain how a lot of the exporters are actually reacting for the moment to some of these tariffs. Do you have a good template of what the U.S. economy looks like in, let's say, 12, 18 months? We also heard this morning about this, meeting between Donald Trump and actually some of the big miners, Rio Tinto and BHP, to build some kind of mega mine in the U.S. I mean, does the composition of the American economy change?
Well, one thing, Francine, I'll say 12 or 18 months out, we're pretty optimistic on the U.S. economy. Okay. The pace of innovation continues. The amount of investment in AI is enormous. And it's at a level, I wonder if it's sustainable. I mean, even Altman said earlier this week, it was bubble-like in AI land. But having said that, what's happening in AI, and that is the leading indicator of entrepreneurialism and innovation right now, you basically have two forces in the world that are really pushing AI. You have the U.S. private sector, which is investing literally hundreds of billions of dollars in it right now. And then you have China, which is more the government putting its own money in and pushing companies to invest in it. Those are the two forces that are engaged in pushing AI forward. The rest of the world's really watching that. And both sides want their standard to be the one that everybody uses. Both sides are trying to get ahead from a technological standpoint. But the positive for the U.S. on that is enormous. And, almost every American company of any size is already grappling with how do you take these incredible tools, which are maybe more powerful than anything humanity's ever seen, and implement that in their businesses. What changes, what jobs can be automated, what things can be done more efficiently. In the United States, that's something every single company, public and private, is already working on.
But it could change everything. It could change everything in terms of job market. It could change everything into reaction function of the central bank. It could change absolutely everything. So what does it mean for markets? Well,
that's the thing. It could change everything. And there are going to be winners and losers. There are already winners and losers from the introduction of AI. No. The education space in the U.S., online education has been transformed because everybody uses the bots for whatever questions they have, whether they're at university or just somebody who's doing research on something they're involved in. So I think it will change industries. It will change the way central banks look at growth versus employment. It may take some jobs away in the near term. I still believe a breakthrough technology like this always creates more jobs. At least history would suggest. The internet created more jobs, railroads, combustion engine. I think this fits into that over time. But could it be more difficult in the transition period? Yes, on the employment side.
Greg, thank you so much for joining us. Greg Fleming.
Great to see you, Francine.
Chief Executive and President of Rockefeller Capital Management.